Well, we're having a crash in Dash as we were expecting, but Dash is not the only crypto going through this. If you've been paying any attention to the news, there's a lot of doom and gloom, a lot of panic in the air. Pretty much every asset class is pulling back, including stocks, commodities, bond market as well, seeing the interest rate spike. But everything is ultimately driven by the same overall sentiment. And this is what a correction feels like. C waves, as we're seeing here, are more or less designed to extinguish all bearish sentiment. And we're getting closer to a bottom. So as of our last update, we had the setup in place, but before that, we had a rally setup potential in place. We're looking for a leading diagonal. So I know there's a lot of clutter here. I'm going to clear some of this just to make it more easier to see. We had a bottom on February 24th, which was the overall bottom for most of the coins, except for a handful, including Bitcoin and Ethereum. And we had a clear three-wave pattern up, and we're looking for a fourth wave pullback and a fifth wave higher. That's what the orange nomenclature is showing. Of course, we took a turn for the worse and we invalidated that. Technically, we didn't invalidate anything until we hit our support at 77.28, and that is based on the low that we hit on February 24th. Like with every other coin, the origin point of our rally was our invalidation point, because in Elliott wave theory, you cannot have your pullback go below the point of origin of the rally. So this cannot be a 1-2 or a 3-4, whatever this was, and therefore red is now primary. Now Dash is a little trickier. While it often has the cleanest structures, or it's one of the coins with the cleanest structures across the cryptoverse, we didn't have a very standard looking second wave. I just did an update on Ethereum Classic where we had the exact same problem, where our second wave bounce was really shallow, but several coins such as Bitcoin Cash, EOS, and a handful of others did have a very standard looking 38.2+% retrace. Here, it didn't quite make it there, but I'm calling this our first wave bottom on April 11th. There is a chance our first wave bottom could have been back here. Maybe this is a really ugly looking leading diagonal, maybe a 1, 2, 3, 4, 5. Either way you interpret it, this is both of the interpretations are calling for a lower low, and which means we're not quite done yet, but we're definitely much closer to the bottom than we are to a top. So obviously I just changed the Fibonacci extension a bit. Our bottom is projected somewhere around the $60 range. If this pattern is being followed as we see, that means that we're probably finishing off the third wave down. About $68 would be where I'd expect us to bottom for this. Expect a pullback, a bear market rally, essentially a fake out here, fourth wave bounce, and then a final lower low to extinguish all the bearish sentiment once and for all, maybe in the $50 range. This is the linear chart, so of course projects differently. If I put the Fibonacci extensions back to where I originally had them, so if I make this the first wave and that the second wave, we do project a little bit lower down the 40s range. That kind of does align with the big picture, which we're going to take a look at in a second. But before I go to that, I will mention that I did unload half my coins about 2 weeks ago now. I fully intend to buy the dip once we hit a bottom, but we all have our own strategies. We have our own unique risk tolerances. So please be mindful of what your plan is. I would suspect that most of you watching right now are hodlers. You're planning to hold through the correction. There's nothing wrong with that. These corrections are very short-lived events. They're painful, terrifying, but then they reverse very quickly. And that ties into your buying strategy. If you're looking to deploy some cash, the bottom of the third wave is often a good place to deploy your first tranches. And that is because you don't always get a fourth wave up and a fifth wave down. It is a corrective wave. They tend to break rules more often than not. So we could have a truncated bottom. Maybe don't get the fifth wave. Maybe the fifth wave doesn't go much lower. Lots of reasons why now is the time to start thinking about buying and less about selling. Now, if we break bigger supports, that could be a whole other thing. So we're going to look at the big picture chart. This is the log daily chart. Haven't really changed too much, although I have cleaned up some of the Fibonacci extensions, which were kind of a cluttered mess in my last few updates. So that's been cleaned up. And I've added a pullback retrace box. Not sure why I never had this in Dash. I did have that in mostly the cryptos, but big picture, we had our rally top in May of 2021. This is one of my more bullish outlook cryptos because I do interpret this as a first wave up and we're completing a second wave down. The depth of the correction looks the part. This looks very similar to what we're seeing in Ethereum. In Stellar Lumens XLM, in which we could actually interpret this entire rally as an ABC zigzag. Now Dash differs a little bit because it's one of the oldest cryptos. It's been around, I think, if I'm not mistaken, longer than Ethereum. But regardless, this is looking like a second wave. We should, based on this equivalence, land in this purple box. So again, A wave, B wave bounce that topped in August. If we take a Fibonacci extension based on that, you typically see your C wave get to the 1.0 extension. That would put us at about $61. That has been a lower target for a pretty long time in my Dash analyses, and we're getting very close to that. We're sitting at about $72. There is, like I mentioned, the chance we go a bit lower. If I take our extensions based on the structure of the C wave, so you have a first wave here and second wave there. I have a fib extension built off of that as well, and that would have us seeing just about that box wall, maybe 76 to 65. We're clearly through the $76 mark, so 65 could be a pretty good strong target range. So this box has a lot of confluence. I mentioned if we are about to start a major crypto bear market or something, we would see some warning signs before that. Our first warning would be breaking through the bottom of this box. If we break below $61 and we don't come back up through it, that could be a sign of worse things to come. It could be a very ominous sign, but I would expect to see some bounces first because typically see more of a warning. We're not seeing anything. We're not near support in anything else. And honestly, there is no official support because this is a second wave. The only coin that is a little bit precariously positioned would be EOS. And we've actually hit the bottom of our box in this in the past few hours. We have 128, which would actually break the overall rally structure to the upside if we got there. So fingers crossed, we're watching carefully. If only one coin breaks support, I'd have some yellow lights flashing. But unless we see other coins break the supports, this would not be as much of a concern for me. For Bitcoin, our absolute lowest support would be about 24,400. That's where our major support lies. I would not like to see us break that. Ethereum, close to about 1,700. That is the low from the summer. There's a lot of significant Fibonacci supports there, although Ethereum's actual support is about 1151. So we need a lot of dominoes to fall for us to get any more bearish than we are at the moment. And again, markets are driven by emotions. It's all about your limbic system. When it feels terrible, it usually indicates that, well, that's a good time to buy, especially when you see everyone around you saying the same thing. The market will not reverse until the bears are done selling. It's at that point when things reverse. And I keep citing other coins such as Ethereum Classic as examples, but in Dash as well. Whenever you have a big spike down, you typically see a very powerful reversal. And I expect the same thing. So have your buying plans ready. We're seeing similar action in the equity space as well, in which we're dipping. We may be closing on a bottom. I would not be surprised to see a spike down to finish the day. Cryptos trade overnight, so we might not see a bottom during normal trading hours during the day because cryptos do trade around the clock. You might see it overnight, might see it later this week. It's not clear, but again, stand your toes because when it reverses, it's going to revert cut. So I'm going to have plenty more updates coming our way. Subscribe so that you don't miss those. It's going to be an exciting next couple of days. I'll be putting out community posts as well. Until next time, thank you for watching and have